Yeah, go ahead, Muthu.
All right, welcome everyone. Good. It's 8:08 Tuesday, February 21. Right. So yeah, once we have this slides, I have very so most of you know me. For those who don't know, Muthu Jagannathan, I live near Philly, part of this stocks and investment group with Nari and a whole bunch of friends. So I'm going to talk about how I use. I mean, we have this discussions on and off about using life insurance policies, right? So everyone has their preference. Everyone have done their own due diligence and check out with the people and have come across others who are using it. So I just wanted to share how I use it because not many people use it like this from my experience, and also I'm not to make it very clear from the beginning. Like, no, this is not about insurance at all. So I'm not talking about life insurance at all. I'm using the whole life policies as a bank, which is kind of like a different concept. Which when I first heard about it, I thought it is kind of weird. But the more I started studying it, I really find it very fascinating because nobody ever talked about this for the best part of 20 years at least for me. And the moment I understood the potential, I realized, like, I was really mad why nobody has told me 20 years before, because of all the time lost and money lost, the savings potential, right? So I'm going to give some high level overview of this idea, okay? How I'm using it and how you can use it to perpetuate, increase, create a momentum velocity in your savings or investments, right? So essentially, look at it totally from the angle of improving your bottom line in the investment, right? So this is not about insurance. Like, I'm not going to share anything about the details about insurance. We're not going to have a comparisons with whole life versus IUL or anything of that sort, or term life for that matter. I'm just going to talk about how you can use whole life policies to create a bank for yourself. So let's talk about what is a bank, okay? Nari, yeah, thanks. So what is a bank, right? So there is a lot of definition. You have seen it, you have used it, obviously. But in a very simplistic terms, bank takes a deposit from the customer and is authorized to create loan, right? They can leverage. There are different rules and regulations, but essentially, Fed has authorized bank to leverage their deposits in many X times for consumer loans or commercial loans. Okay. So that's the part that we are going to focus on. So we're going to focus on using the concept of a bank, where you make a deposit and then withdraw in many different ways. Okay, that's as simple as a definition for us. For the part of the bank's work, that's what we are going to see how we can use in our own policies. Okay, so the idea is to have control, so to gain control of how we are accessing money. So you look at it, like, I think 500% is pretty standard. There are some banks which leverages a lot more than that. There is a website called Bauer Financials, BAUER financial uh, Bauer Financial or Financials, right? Either one of them. I think one of them is not a good website. It was giving me, Norton was giving me a problem accessing that. BAUER Financial. Okay. Maybe I will, when I send the email to Nari, I will give that link as well. In the email, we can add it to our recording. So Bauer Financial displays all these leverages of each and every bank. You can check it out. It's I think most of that is a paid report, but they have recorded information of how the bank, each and every bank, commercial banks are using the leverage for customers' deposits. Okay. So you take a look at, hold on a second, Larry. So if you look at, simple 4% interest on the deposits, the bank can leverage that in with the loans, using buying a house or buying a car, remodeling the house, credit cards and all that. So essentially it can go all the way up to 20%, right? Like, I mean, I'm just giving a very, very oversimplified explanation of how banks can convert the deposits to loans. All right. Next slide. All right. So we have to look at compare how whole life insurance perform, right? So a lot of people try to every time when you talk about this idea to especially to insurance agents, they would say like, no, whole life insurance policies are not for investments, right? Don't use it for investment, right? So just buy term, protect your life. So I have term life policies as well, more than one for the family, right? So, but I'm not using whole life policies for insurance purpose. Insurance is there. It's an added advantage. It's an extra benefit, but I'm using it solely for the purpose of investment. So what's the difference between traditional investment and this type of investment strategy I'm going to talk about? I'm going to explain it a little later in one of the slides. So the difference is whole life policies give you a guaranteed return. Okay, I'll explain to you, and you can ask that with any insurance agent. They will explain how the guaranteed income is coming from the whole life policies. Obviously, that is the reason why the premiums are a little bit more expensive than term policies. So if you cannot compare term policies and whole life policies, they're not apple to apple. But the way whole life policies work is like, they take the investment premiums and then they give the guarantee back to dividends back to the policy holders every year. So that is the reason. Like, so there are different numbers. Different insurance carriers have different percentages coming back. But on an average, across the board, you can say 4% as the bottom line minimum money that is coming back as a dividend. So you can say, you can confirm that 4% is a guaranteed dividend earning every year from a whole life policy. Okay, let's say you, for example, you have $100,000 invested. $100,000 as for the sake of explanation. $100,000 is your premium every year. Then you have 4% coming every year as a dividend added to that $100,000. And the next year, that $104,000 is your base where your dividend is calculated. Okay, it's not exactly $100,000. It will be probably $90,000 or $80,000 because they calculate the dividend only for the cash value. But for the sake of calculations, like, if it is $100,000, you know how the compounding works. So use a whole life policy, and the dividend is compounded on that policy. So right there, it creates an cash flow for you, and the compounded incremental income that is added in your policy. Okay. Next. So what do we do now? Like, now we are getting money added in your account, 4%. So what we can do now is, like, we can make the money work for us. In fact, we can make the money work for us. We can make the money do more than one work for us, right? Multiple work for us. So what does bank do? Bank is lending money, right? Lending is the easiest way to multiply your money. There are several ways you can safely lend, especially places like real estate, right? Real estate or assets-based lending. So you have a backup of hard assets like real estate property, either the land or the building or both combined. So there is a guarantee. That is why banks prefer. I mean, that's the reason for a lot of real estate boom. The getting money for the projects is very, very feasible, easy for banks to convert that asset into, create a loan for that asset. So creating loan, lending from your policy cash value is the easiest way to multiply that money. So now at one end you get 4% guaranteed income every year, and then you can take policy loan. Unlike the bank loan, there is no credit check. You can just call the company or call the insurance carrier or go to their website and draw the money out based on how much policy value you have. So that money is yours. You can take it anytime. So that is the reason why I'm saying that you can use it as a bank. The most important thing here is the control. When you have a loan from a bank for a property, for an auto, or for anything, like for any other student loan, for anything, any type of commercial loans, anything else bank lends. Who owns the property? It's the bank, right? So whoever is the lender owns the property as well, because they are what, first lien, right? So they have the control. So now you have control. You are taking the control over to you, right? So you are the cash value of your insurance is going to act as your own bank, and you can create. You can lend the money out, and you can control how much money, based on how much money you have in your cash value, you can withdraw and use it for your own lending as a bank. Okay. Next slide. So this is the simple comparison. Like, on the left side, I have what typical household processes are, right? There is income, and you have expenses, and then whatever money remain, you invest, or you'll switch that also, right? You will have income and you can invest. Usually there are different school of thought. Like, there are some people who realize that okay, I will invest 10% or 20% every from my income by default, right? So I'll do the investment first and then take the rest of the money for expenses. And some people will do the expenses, and then based on the leftovers, like they will plan on investment. And sometimes things like 401ks, IRAs, like the money goes there first before the income comes to you, right? The salaries, paychecks comes to you. So that's the traditional conventional mode. So now you have the control of your investment. You invest it with whatever money is available after taxes, right? Whereas when you have a policy on the right side, you have the income, and then the income goes into the policies. Policies create cash values. Cash values, you can take a loan and invest. The investments create returns, and the returns goes back to the policies, or from that return you can create additional investment. So you can actually accentuate your investments in multiple ways, right? So that is what I meant by creating multiple ways of making the money work for you. Okay, that's the idea of using the policy. So, I mean, obviously you have expenses part of the game, but you can have more than one opportunity to invest because you have cash value, which is totally in your control, and you can increase it based on where you want to invest, right? Okay, next slide. So here is an example. So a lot of times people compare the interest rates. So in insurance companies give you policy loans based on how much money you have in your cash value, and what they do is they use your cash value as a collateral and then give you the loan. So let's say $100,000, you have $80,000 as cash value sitting in your account, and you can take up to $80,000 policy loan anytime without, nobody is going to ask you any questions, no credit checks, no delays, no paperwork except transaction. So there is a 5% simple interest charged. Okay. So a lot of times people compare that with HELOC loan or any other bank loans. Sometimes the loan interest from the banks are less. Sometimes the loan interest from the banks are more, especially now the interest rate is high. But there are times when the interest rates were like less than 3%. So the policy loans never increased more than 6%. 6% is the maximum. So with my insurance, I have insurance with Mass Mutual. My insurance carrier, it is only 5%, but some companies charge 6%. Okay. So now you have the dividends. But the dividends are calculated on the full cash value, whether you take policy loan or not. So that's advantage. That is what I'm going to show as an example here. So you when you take a loan from your policy cash value, let's say $100,000 is your premium, $80,000 is the cash value. You take a loan $80,000. The dividend is calculated on 4% on the $80,000, and then you have to pay whatever is 80. That 4% is a compounded interest, whereas that 5% what I'm taking from the cash value is a simple interest. Okay. So the moment I pay on that loan, the interest reduces, whereas the 4% keeps increasing, right? Every year, the 4% keeps added in my policy value. So on the left side is the traditional auto loan, right? $25,000. Let's say when a very good time, the interest rate is 3% from the bank and the loan term is 5 years. Or for the 5 years, 3%, if you go to any website, loan calculator website like calculator.net, you can see the total interest paid is $1,953, right? Give and take a couple of dollars. So that's on the left side. So that's what we'll have if it is a traditional auto loan. So that's what people are used to do it, right? I used to do that before I have whole life policy. So with whole life policy, I have on the middle, I have a um, I have a policy value, cash value, right? Cash value is added into my policy based on the premiums I'm paying. So I have money sitting in that policy. I can take anytime. When I take, my interest is, I'm using an example of 6% a year, right? But I actually pay 5%, but I'm taking the maximum 6%. So $25,000 auto loan, 6% interest rate for 5 years. The total interest is 3,999, which is pretty much double, right? Like 3%, it's 1,953, and 6%, 399, right? $2,000, $4,000. But here is the kicker. On the bottom, you have the dividend. So policy dividend growth. If you see that second half of that middle section, policy dividend growth has 4% dividend. For 5 years, that 4% compound interest is $4,333. So that money is added into your cash value. So if you look at it, like how much we pay in our in terms of interest for the car, even though I pay more, right? So if you just compare the percentage, I paid 6% in the policy when I'm getting a loan from the policy, whereas 3% compared to the loan getting from the bank, right? So people.
Sorry, Muthu, just checking your calculations, right? So if in the top, right, 25,000, you are paying 6% for 5 years.
Yeah.
That is $6,000, right? How do you get 3,999? See, 25,000, 6% is $1,200, right, per year. And if you calculate for 5 years, is 6,000.
This is from the website calculator.net or anything. See, it's not simple interest, right? Like the money, the interest reduces as you pay the loan.
Like a mortgage.
Yeah, like a mortgage.
You pay some capital, so it's not 25,000 every year. The
Yeah.
capital goes down.
Yeah.
Right. No, but that you're paying off the principal also, right? You're paying off the principal in both cases,
Correct.
in the top and the bottom, right? So
Not in the 20,000. Not
so
in the 20,000. It can't be.
why 20,000 and not 25,000 in the bottom?
No, no, yeah, I'll explain. I mean, I'm saying 20,000. 20,000 is the cash value sitting in my policy. Okay, this is a totally different calculation. So to compare the interest rate, only the top portion, 3% and 6% calculation, right? So without the policy, I have interest paid 3% or 6%, correct? Now I have a dividend which is added in my policy, which is 4,333.
You're taking a loan
Yeah. Insurance companies give a loan from the policy.
and you're investing the loan at 4%.
I'm using I'm taking 25,000 from the policy to buy the car, right? The loan for the insurance company charges 6%.
I'm fine with that. But what's the policy dividend growth? 20,000, you're taking a loan of the cash value.
25,000. I'm taking a loan value of 25,000. I'm at the bottom. I'm entering only 20,000 as the cash value. I'm not putting 25,000 as a cash value. I mean, it could be anything, right? So
I understand that. But
yeah,
you're using the cash value of 20,000 to take a loan of 20,000 and investing it at 4%.
no. The 20,000 stays in the policy.
Okay.
Okay. So at that 20, actually I should have put 25,000 because 20, I'm using an example of 25,000 at the top. But if I put 25,000 at the bottom, 4%, it is going to be more than $4,000.
It'll be 5,000 something.
Yeah, 5,000 something. So that means there is more cash sitting in my account even after I'm paying 6% interest. That's my point.
So I think your logic is even when you take out the loan, you are still getting the full dividend
Yes,
on the original amount
correct.
without calculating the amount that you have taken out.
Correct. So you look at the loan payment, which is a decreasing payment, right? So the interest rate will keep reducing every year, right? Whereas the dividends keeps increasing every year because it's compounded. Original capital and then dividend added next year, capital plus dividend, 4% calculated on that, right?
Right. But if suppose if you don't take out the loan at all,
Yeah,
then you are going to get the full 5,000, right?
right,
So
right.
so
That,
so yeah, I see here in this example, let us say that the top 25,000 is 4,000 and dividend is 5,000, just for
mhm,
argument's sake. Okay.
right,
So that means you are making a profit of $1,000,
correct,
correct?
right.
And
That's
yeah, but if suppose if you don't take the loan, okay, and go by the 3%, the first route, right?
mhm, mhm.
First route you are paying off 2,000,
Yeah,
right? And then you are getting a dividend of 5,000. So net effect you are gaining 3,000. In this
right.
case, you are gaining only 1,000.
No, in the middle section, I'm using the 25,000 what you would be paying for the auto loan. I'll be
Yes,
paid for the policy.
yes,
Okay.
yes.
What
But see,
example you are saying?
when you are withdrawing money from the insurance company, they are charging you 6% interest.
Correct.
Correct. So if you are so round numbers, right? So let us say in the left hand side, this one 1953 is $2,000. Now here you are getting you have to pay interest of 4,000, but you
Mm-hmm.
have a dividend growth of 5,000. So you are
Right.
saying that your net is only 1,000, right? Because you are out of the 5,000 you are getting in dividend, you are
Yeah.
paying interest of 4,000. So that
Right.
means the
Right.
difference you are up by 1,000 in the total calculation.
Right.
Whereas
Right.
if you keep the don't take the loan from the insurance company and
Right.
just get it from the auto company, that auto finance, so that is only 3%, if you're saying. So
Mm-hmm.
you are paying interest of only 2,000, and then your dividend is still 5,000, right? Whether you take the loan out or not, it is still 5,000. So the difference is 3,000. So you are up by 3,000 rather than 1,000 when you take the loan.
Yeah, but in your
I don't understand how you are saying that taking the loan is more advantageous.
yeah, the difference is in your example, you are paying for the loan and you are paying for the premium for the policy. In my case, in my example, there is only one payment for the policy, and of course for the loan interest. But say if you, in your case, you have to pay the auto loan
Yeah,
payment.
auto
Let's say
loan I have to pay 2,000, but I'm getting the dividend growth of 5,000.
correct, but you're also paying for
That is
so
irrespective of yeah, that you have to pay in both cases, right? See, you have to
no.
pay your premium.
No, in my case, only premium. Whatever money I'm paying for the auto loan, I'm paying in the premium.
Yeah, correct. But
Yeah. No,
but
I
if
mean,
you see,
let me
I'm saying
complete
if
the
you have the whole life insurance policy, right? You
right,
have the whole life insurance policy, and then you are getting a dividend of 5,000
right.
every year. So that is accumulating. So that is there in any case, right? Whether you take the loan out or not. If you're taking the loan, you're paying, in your example, like $4,000 in interest, whereas in the finance company you are paying only 2,000. So that is where I don't understand how you are saying that the whole life insurance you're taking as a bank. How does it help you?
Yeah,
Because
yeah,
they're charging 6%, right?
right.
Yeah.
The percentage is more, but you are paying it back, but your dividend is growing, right? So 4%
But
money.
dividend is growing in any case. If you have a whole life insurance, then the dividend is growing in any case.
Right, right. No, if you don't take auto loan, the dividend will grow. I'm not saying like, take
Yeah,
auto loan. I'm saying like, when you take auto loan, how
yeah,
the difference, so, the money, you're not still affected by the growth of your money, right? So the money, original money you are keeping in your policy, that money keeps growing. So here we are calculated only for 5 years. So if you look at it on the last column, 30 years, the money dividend paid total is $44,000, right? So irrespective of, it is as good as like, you do it paid for the entire car, the dividend, right? So your car is free. That's my point, right? So we have all these expenses, car, houses, and everything. Okay, in terms of expenses, if you have a policy, the dividend that is coming in your policy is going to pay for all the expenses. Number one, okay. Number two, look at it from the investment perspective. Like, you can replace autos with an investment. So if you take a policy loan of 6% and invest in a property which will give you, let's say, 10%, right? So then you have a 4%
right. Yeah,
overall.
that
So you have to
I
look at it
understand.
that way. Like, in your, I mean, for your type of thinking, you should look at it as an example, as an
I
investment.
think as an appreciating asset investment, it makes sense.
Correct, correct. I mean,
Whereas a
I'm giving
car
this.
is not an appreciating asset. Yeah.
Yeah, 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 exactly.
Muthu,
Uh,
like this also assumes that the interest you're paying to the policy is much higher than what you're actually paying the bank.
mm.
Is that always true?
Yeah, 5%, 6%, 6% is the maximum. You don't pay more than 6%. 5% is default in many
He has assumed the worst case, I think.
yeah,
Right?
I'm taking the worst case, yeah.
And also in the bottom one, it's $25,000 policy dividend growth. It's not
25,000 policy, and the dividend also is more. Like, I'm Mass Mutual has given me 10% dividends and all some years, but 4% is guaranteed every year. Definitely, you'll get 4%. Many, I mean, in almost every year, I have got more than 4%. So, I mean, it's very, it's not an easy thing to articulate, I guess. Like, but my point is, like, you can have the money work in two places. Like, one,
Yeah,
the
so
money,
the see, I think I found any insurance, right? Insurance and annuity, I always find that there are a lot of fees.
yeah,
See, the agent gets almost the first year's premium, right?
right.
So there is a lot of fees. That is what screws up the insurance model. So I don't know whether you're taking into account all the fees and all that. But
Yeah, yeah. I mean,
whole
see,
life, definitely insurance companies, there is a lot of fees, hidden fees, open fees.
Yeah, open all that is there. That's why what we looking. That's the reason. One of the reason why I'm picking whole life for a
Yeah,
mutual company. So when you use a mutual company means the dividends are shared only with the policy holders. There is no other. They are not trading in the stock market. There is no other services, right? So
right.
the expenses are minimum and the returns are coming back to the policy holder straight. There is no any other extra. There is policy expenses. It is very minimal. Like you said, there
Yeah,
are premium bonuses, commissions going to the insurance agent in the first year. There is a lot of money that goes, but we can set up the policy where there are two things: insurance cost and then what they call a PUA. I forgot the exact name for that, expansion for that, but that's called a rider. So PUA is what will add cash value to your policy. So if I keep the insurance cost minimum, because I'm not taking this for my life insurance, right? So keep the insurance
yeah,
cost minimum to get the maximum death benefit, and then add all the money into the PUA. Then I can get 90% of my premium back into cash value. So if I put $100,000 premium every year, $90,000 I can get cash value. In fact, I can get the cash value right away. As soon as I pay premium, I can take a loan, $90,000. It's as efficient of a bank as it is. So for the case of look at an investment example, right? So if you think of an investment, you can start making money in two places, right? 4% dividend from the insurance, and then 10% or 20%, whatever percentage from the investments. And you are total control. You can take money from there and you can invest in anything you want. And if you look at it over a long period, 20 years, 30 years, then it makes sense because all the expenses are, very, very minimum compared to the
yeah. The
returns.
initial expenses wouldn't matter,
Wouldn't
in
matter.
30
Yeah.
years.
Yeah.
So I think one of the biggest advantages of insurance, I'm not sure whether you're covered in your deck, is it is there is no tax on that.
Yes, exactly.
So,
I'm not covered. I'm going to talk about it. There is another slide which is I'm just putting all the benefits.
So I have a question.
Yeah.
It's a very fundamental question, not number based. So essentially, what you are saying is take a loan on the cash value of the insurance and invest it. Okay.
Yes. Invested.
Okay. Now, for example, last year, 2 years ago, before mortgage rate went up and all,
Mm-hmm.
a lot of people took the what you call home equity loan
Mm-hmm.
because it was only low percentage, like 2% or 2.5% or whatever it is, same as the mortgage rate at that time,
Correct.
and invested it in stock market. Last year, they lost a lot of money.
yeah, and
So
now
my
it would
question
have
is,
gone up.
my question
Actually,
is,
yeah, I think no, I think that's
wait.
a,
My
yeah,
question is, fundamentally, some people will say, don't take a loan and invest it because,
Yes.
especially stock market, you will lose.
yeah,
I mean, you may get money too, but sometimes you lose. So very
yeah,
risky type of thing. It's like margin trading. So how do you answer that question?
yeah.
That's
No,
why you have to.
that is fine.
That's why you have
I
to
think
be.
yeah, I
That's why
think
you
it
have to
is
be part of
subjective.
Nari's group to learn how
I
to make money.
think it is subjective. So we do have one more presentation. So Muthu, how much time do you need more?
No, that's it. Like, a few more
Okay,
slides. There are not many. So let's go
okay.
finish the
Let us cover
deck and then,
the concepts. Yeah,
yeah. All right,
let us
let's go to the
do it
next
quickly.
slide.
Yeah,
All right, I think we are pretty much at the end. So these are some of the additional benefits, right? So you have total control of the policy loan. So there is no permissions, no credit checks, no waiting period and all that. And some of them, the whole life policies are called permanent insurance. That means like you can keep it for 100 years, right? So you can pay premium and the money keeps, cash value increases, dividends. It can keep on expanding. Forever, right? Until the policy expires after several years, right? So, but people will be wondering like whether can I pay premium every year? So that you can adjust, like you can reduce the premium, pay only enough for the cost of the insurance, not worry. That's why we have to make that adjustment between the cost of insurance and the rider. And interest payments are very, very flexible. Like unlike bank loan, auto loans, or any other loans, the policy loans, you
Yeah,
can pay only the
excellent.
interest, and you can even if you don't pay interest, they won't bother you, right? You can pay whenever based on the calculations. You would have to pay,
Yeah,
end up paying extra, but you'll still, it's in your control. And there is an option, you never have to, you can never can repay the loan. So if you don't repay, then obviously, like, it will be deducted in your death benefit. But I mean, there is nobody forcing you to pay the loan.
yeah.
And
No,
another,
I'm actually surprised that they, for the dividend calculations, they are not taking the loan it account. That is a
yes,
huge advantage.
yeah, because loan is only a collateral, right? Obviously, for that they're
Yeah,
getting 5% return back, so they are not like, losing any
yeah,
money.
correct. Okay, no, this is good. Let's see whether you have, this is the further
So there is
reading.
one more slide for more curious people, like, start with something called, I mean, this is Nelson Nass's book, Becoming Your Own Banker, is what I
Oh, this is
really,
the infinite banking concept. Okay.
yes. Yeah, he is called the father of infinite
So
banking concept.
this is based on the same concept.
Yes, this is based on the same
Okay.
concept. So,
Nari, one more question, very simple. Muthu, when you said whole life, is universal life similar to that?
I mean, yeah, there is universal life, IUL. You can use the same concept in all of that. Like, I mean, HELOC is also there, right? Like you can use HELOC for the same principle, but the idea of using it as a bank is the theme of my presentation. Okay,
It's
so
only on whole life, right? Yeah.
no, not necessarily on LAL. You can do it in IUL as well. IUL
Oh,
also
okay.
has policy loans,
Okay.
but I haven't. I was not focusing on IUL or other type
Okay.
of
No, I
insurance.
think this is definitely food for thought. Thanks, Muthu. This is
Yeah,
good.
you're welcome.
I'm going to stop the recording right now, so that we can I think it's going to combine anyway. Yeah. Okay.
Recently also moved into the specialty coffee space. We started back in 2018, so it's been a 3-4 year journey right now, and moving into a very exciting opportunity and kind of reaching out to initial group of friends and close networks, more from a sort of a small crowdfunding kind of a perspective. So I'm just going to really quickly cover a few things, just to give you a little bit of background. I'm sure all of you all have heard about, Bangalore being the beer city. It's always since the 80s, 90s, 2000. It's kind of evolved in that way. So the craft beer market is basically, in the US, it's probably the leading market right now in India. Bangalore in itself is in India. Bangalore is the hub for the craft beer market. Just a few points in here. I'm not going to go through each one in detail, but just roughly, the growth of the market has been phenomenal in the last 3-4 years. I would say the whole craft beer space started in 2010. People moving away from your general kingfishers and the commercial lagers, more into this experiential concept of craft beer. It's evolved a lot ever since, at least in Bangalore, and of course now moving on to various other cities. There are some numbers in there, some facts in there, just to show how it's kind of grown. Back in 2010 to about 2015, it was only about 2 to 3% of the overall beer market. In the last year, in the last 21-22, this has gone at least about 7% of the overall beer market. So a lot of commercial craft beer companies are also looking at this space quite closely. Bangalore itself has been growing significantly. I think in the last year, it's outdone the commercial lagers, in terms of in liters sold per month, as per information that we have from excise. So post COVID, there was this whole revenge going out. This people were the F&B segment was doing very well in Bangalore. We expected a kind of a level out over the last few years, but we're still seeing it at about 1.5 times what it was doing pre-COVID times. So that's just some background to the space itself. the where we come from. So basically, we're a bunch of guys very enthusiastic about or very passionate about beer. All of us come in with varied experiences, more than 2 decades, corporate experience in various fields, right from manufacturing. Some of us have spent time in the alcobev space with companies like AB and Bev and Sab Miller, Kingfisher. Our German partners, all more on the tech side with companies like SAP. Also, one of our investors is a brewer who's been in the scene and has his own brewery in Germany. So this whole journey started back in 2015, 2016. Actually, when I was based in Europe, I spent a lot of time with Siemens. So I was based out of Munich for some time, and that's when this whole idea started. And it actually culminated in the city of Mannheim. So we stayed true to the roots of where this whole idea came up, and called the brand Mannheim. So we started in a very different format. So again, given all of us coming in more, first generation entrepreneurs, never really moved into this space. Really, we moved to the more cautious approach. So we started with where instead of traditionally setting up an entire microbrewery and all the capex that's involved with that, we moved on a different route where we know we had the specialty and the expertise in terms of the beer side of things. And so we approached locations, restaurants who wanted to set up a brewery in Bangalore, but didn't necessarily have the know-how. They had the know-how on the food side, but not necessarily on the craft beer space. So this is where we helped out. We came in and set up a brewery on premise, and kind of worked on a model of where we were doing the sales. The commercials based on the sales of beer on site. So we did that for about 3 years. Our vision has always been to be on the anything to do with craft. So as the beer journey continued, we also recently moved into the specialty coffee space in the last year and a half, with a similar model. And it helped us. The reason we chose that model is it's kind of a little bit less risky. It also gives us an understanding of gives an opportunity to understand the market, understand the operational aspects of it, which we have done over the last 4 years. So just a real quick overview of the people behind the scene. The one on the right hand corner on top is me. And as you can see, a varied level of experience between the core investors in the group. Please stop me at any time. I'm just going to keep going around, going down the slides. So as I said, it's been about a 4-year journey. COVID aside, we've had some good successes over the last 2 years, winning quite a few awards and recognition, not only in India but also in Asia. So in the Asia Beer Championship recently held, we won some pretty coveted awards, both in terms of overall recognition as the champion small size brewery of Asia, country champion in India, and a few other individual prizes towards our beers. In India last year as well, we picked up a couple of awards. We have the annual one is coming up again on Friday this week. So we're really keen to see if we qualify for some of these this year as well. So the last 3 years we've been entering our beers into championships across India, across Asia, basically to not because we had a sense of validation from our consumers, from our customers, in terms of the quality of what we were giving. And we wanted to get that also with our peers and also see, from qualified experts where we stand. So that's kind of where we were. On the coffee side, we recently started this journey about a year and a half ago, working again with restaurants who want to set up a cafe. We come and run and set up the entire cafe in the space. Again, here we've been, enjoyed success in a short period of time, given the quality of what we're giving. We've already partnered in the last year with about 4 locations. Now we also have set up 2 of our own cafes in the last 3 to 4 months, and have recently in the last 3 months come onto e-commerce in terms of our web store and on Amazon as well. These are the 3 locations that we partner with, and 2 more locations that we've just started our own cafes on in the last 2 months. Again, with the coffee side, we've entered a few championships on the AeroPress side. Most of the AeroPress championships in India use our coffee beans that's being held over here. So that's also another testament to the quality of stuff that we've been doing. So just a rough roadmap in terms of where we were, and just to give you a little idea of where we're going. So between 2018 and 2022, what we call Mannheim Craft Brewery 1.0 was getting more what I was talking about, market entry and validation of the concept, and also an understanding of how the whole market works, so that, kind of getting our feet wet. um, uh, Post 22, so 22 to 25, we are looking at scaling. So in both in terms of the brand as well as in terms of in terms of our financials. The 28 to 22, the period where we were working more a brand within a brand, gave us that recognition, but it is not great in terms of it's not a very great model in terms of scaling, or in terms of both revenue as well as your brand. So now we're going down the path of setting up our own distribution brewery, as well as establishing our own experience zones or our own tap rooms across Bangalore. And of course, 2025 onwards, the vision is to go more towards the the retail side of things, in cans or in bottles, for our beer, as well as with our coffee. Move more into the retail segment. So the little
Naveen, can you
yeah.
explain what do you mean by coffee? Like, how do you sell it? Like,
So it's what we call specialty coffee, right? So it is how we source our coffee from an estate we partnered with in Chikmagalur, in close to Bangalore. And we roast we buy the green beans. We have our own roast profiles that we roast, and then we sell only the beans that is on our site, or ground beans which is on our site, or we sell the coffee, our profile of coffee, through our cafes that we have. Does that
okay.
answer your question?
So yeah, you said retail also, right? So
We
you're
haven't
selling.
got into retail as yet, but that is the direction we want to go. So right now it is it's
Okay.
only been about a year and a few months now, but we already have an offline presence through our
So
cafes, and we're just
is it like for filtered coffee, or some like instant, or what sort of?
no, it's not instant. So that's why we don't do instant. So we don't do any chicory. So it is basically pure. It's Arabica, Robusta, and an 80-20 mix. So it's more your specialty coffees that you would see. So it's a little higher grade, or the higher grade coffees that we use essentially.
Okay. So how do you differentiate your coffee from a lot of other coffees?
So it's so in a sense, there are other players in the market. So you have in the specialty space. So you have players like few of them like Blue Tokai, Third Wave. Starbucks is more the chain format, but it's considered sometimes within the specialty space. Um, Currently, we are seeing it in more in terms of the variants that we're doing. I think the varieties that we're offering in our coffee is a little bit different from what the competition is doing. So we do, as well as our packaging is very different, is a little unique in terms of what we do. So those are the aspects. Quality is definitely one of them, but that is not everybody would always say their quality is better than the others. We also use a lot of techniques that we use. So because we have the beer side of things and the coffee side of things, we do some interesting experimentation with some of the stuff that we do. So for example, we are now just going to be coming out with a Hefeweizen yeast flavored coffee. So that's not something everybody does, but we have the advantage because we have the two lines of business. We kind of cross experiment between the two. We do the similar things with our beer as well, where we use some of our cold brews with our stouts. So kind of using both the product lines to experiment from that perspective.
Okay.
How,
Yeah.
how do you
Again,
guys compare to Blue Tokai?
Again, I'm just going to go back to the same point. So for Blue Tokai has been around a lot longer than we have. They have a lot more on the offline space than we have. We've only been around for about a year, like I said, a year, 3 months, year, 4 months.
Okay.
It is a lot in terms of pricing wise, not very different. Definitely what we're seeing is, quality wise, we are getting a lot of feedback that, so Blue Tokai is a brand based. They're pretty much out of North India. So again, coffee in India, as all of you all must know, is a very the South prefer a little bit on the stronger side than the North. Our coffees are very tailored more, because being based out of Bangalore, are more towards the that kind of palette. The other thing is the varieties that we do. So we bring in a lot of experimentation in terms of not just your standard your variants that you have, but a lot of variety in terms of the coffee that we bring in itself. So we'll have a house blend, we'll have different mixes with our house blend that cater to a strong, to a light. So we do a cold brews. So we do a lot of work from that perspective.
And you guys have like a long-term contracts with the coffee bean providers?
Yes, we do. So the estate that we work with has partnered with us. We also work. We have just recently now started exploring various other estates because of our capacities have gone up significantly in the last 2 to 3 months due to demand. We are also now set up a pilot with WeWork in Bangalore, where we are setting up cafes. We are working on one cafe that we're going to be setting up with them, with the idea of setting up cafes within WeWork spaces over the next couple of months.
Is it like a one elevation or you got multiple elevations?
No, one elevation. Currently.
Okay.
So will the place selling beer also sell coffee, or there'll be
Yes. So that's what I mean. It's our experience zone. So I'm just going to quickly jump to the locations, because that might give you a little bit of a visual. So we're setting up a large, if those of you familiar with Bangalore, so we're setting up this large brewery and cafe space. So it's a commercial, what we call a commercial brewery. So what we will be able to do, unlike other microbreweries, is we have a license wherein we can sell our beers on our site. That is in this location. It's a large 1 acre property. So we have about 10,000 square feet of space which we're using for a large commercial plant. When I say commercial, I mean we can sell on site, as well as it gives us the license, allows us to sell in a keg format to various other locations, as well as ultimately later on when we want to get into bottling and canning, the license allows us to do that. So we've consciously gone down that path. So this location is, as you can see, it's a large space, 1 acre space in the heart of Whitefield, where we're setting up a cafe with a roastery as well as our entire brewery. So our entire thing is that anywhere where we have our locations, it's going to be what we call our experience center, where you will have both aspects of it, right? So the experience both aspects.
Do you guys roast it or you license it from somebody?
So currently, up until this month, from next month, we're going to be roasting it ourselves, because our quantities have gone up significantly. But up until till now, we've been doing it with a third party roaster.
And like you guys own the blend, or they own the blend?
We own the blend. We own the blend. The blend is us.
Okay.
Yeah. So we've just recently invested into a roaster. So we'll be, because of this location and the pipeline of demand that we're getting. So we're going to be roasting pretty much in the next couple of months on our own. Also, the capacities have gone up significantly. So our third party roaster himself is not being able to take over that capacity.
And you guys are all full time on this?
Yes, 100%. So up until 2019, I was still involved. I was basically wearing 2009, 2020. I was wearing two hats. Post the second pandemic, that's when I kind of me and my other partner Shankar as well got 100% into the business. Building it from there.
Great. Okay.
Yeah. So this is our the what we call our mothership. So this location is going to be catering to what we call all our other tap rooms. So we have another location, a smaller location, which is taken up in the area of Bellandur, which is not very far from Whitefield. It's bang in the middle of a tech park. Our idea is going to work like a hub and spoke kind of a model. So this place will be the hub, which will cater to not only various external restaurants, but also to our own tap rooms. The reason we want to go down this path, and I'll just take 30 seconds covering that, is essentially because, setting up your own space, the one way is from a beer distribution point is to sell it to various restaurants, but your margins that you make because you share shelf space with other brands is significantly less. It's more a marketing exercise. A lot of brands we're seeing are going down this path of setting their own locations, their own experience zones in various hubs of Bangalore. With this whole, a lot of you all would have read about it, seen about it, but with infrastructure going the way it's going, people are staying within the suburbs that they either reside in or they work in. So it's becoming more, it's kind of migrating more that way. So kind of we are also following that path to have a location in various sides of Bangalore, so that we cover having the consumer come to us, so to speak. So we've taken up a smaller location at this location at Eco World, which is in Bellandur. It's a 3,000 square feet place where we have a small cafe, as well as beers coming in from our from our place in Whitefield. All of these outlets will also have F&B, so the food side of things as well. The one in Whitefield it's pretty big. It has about 700 covers. The one in here will host about 110 covers. And recently, in the last month, we've also taken over a smaller location, another location in the heart of Bangalore. So this is basically an interesting opportunity that came our way, where there was a location already running, where the owner wanted someone to come and take over as their brand and run it. Essentially, because he was in his late 70s, been in the F&B side for the last 35 years, and slowly wanted to move more into a retirement mode. He knows one of our investors extremely well over the last 25 years. So he was very interested in us taking over the brand. So all of these locations are going to go live between April and May, essentially. So just really quick, getting into I know we're a little bit out of time. Just a rough projection, and I'll share this with everyone as soon as we get off this.
If you can send the pitch deck to Nari or
I will do that.
Thank you.
No worries. So this is I've converted it in dollars just for your benefit, and just kind of on the right hand side a pie chart showing the where the distribution of revenue is coming from, the revenue streams that we're getting in. And you can go over this at your leisure. I'm just before we run completely out of time. So we started a little, so we obviously we didn't want to look at a large scale investment at this point, because of we said, okay, we don't want to dilute consciously. And how do we fund all these projects? So of course, most of these projects we have funded within the internal investor group. But back in December, we had an interesting approach from our immediate networks, which is close friends, business contacts, who said, I've always wanted to have a ownership within a brewery, but it's been very expensive in terms of investing into them, because people are looking at large scale ticket items in the scale of 2 crore, 3 crores to be able to do that. So we said, okay, considering this, we kind of worked on, and that's what I was saying, that right in the beginning of this, a small crowdfunding kind of a concept, where we kept a small portion, a small corpus aside towards allowing friends and immediate networks to be able to participate and having this sense of ownership towards a microbrewery and this whole brand concept, without having to pay a large amount of money. So that's kind of where this whole thing started. So we currently have about a corpus of about 300,000 that we've kept aside for this. And we're doing small ticket size items, starting at, we don't want to go below, I'm sorry, I'm just going to talk about an INR before doing the conversion, but starting at ticket sizes of 5 lakhs and going upwards from there. And we've got a lot of, in the last couple of weeks, we've had a few people biting into it and coming into it, but we've kept this kind of thing open up until the end of the Indian financial year, which is the 31st of March. Just more in terms of manageability and all of that, because once we have a few of these in, there's a lot of execution on the other projects that we're doing. So we don't want to keep this open for that long a period. So this is kind of what we have been circulating, and have had a few people actually participate, with this in Bangalore, essentially, because the other portion of it, more people who are in Bangalore, they automatically become, sort of our brand ambassadors. And that was the other spin to kind of doing this crowdfunding concept for a small portion of the amount. So I'm just going to leave it there. I know we are well out of time. I'm happy to share this with Nari. If anybody wants to, direct message me and have a more detailed conversation about this, I'm happy to do that. If you have any questions that you want to quickly cover over the next minute or two, I'm happy to take that as well.
Naveen, so how much have you raised so far?
So for this, out of this 2.5 CR, we've already got in the bucket about 85 lakhs has come in. We already have a few people who are looking to put in some money over the next week to 2 weeks. When I say in the bucket, I mean in the bank already. So and we've been actually getting a lot of people asking us to kind of increase that to accommodate a little bit more. But now we just kind of, for this tranche, we're just kind of keeping it at that and working with that.
Oh, okay.
Yeah.
So Naveen,
so roughly about 1.5 still open.
Naveen, you said that you have some kind of resort you take, and you have opened some pubs in that side. So are you guys leasing that, or you're owning that property?
The one in here?
in
So
Whitefield.
all the properties are leased. We have a 9-year lease on all of them. So none of them are owned.
The money that you're
Including the
raising, is it?
restaurant?
I'm sorry, go ahead.
Is it including the restaurant that you got in Garuda Mall?
Yes, so the restaurant in Garuda Mall, this one is because everything is already set up, we have a 5-year renewable contract. But the other two locations, because we've kind of built this from, not built it from scratch, not this one at least, this was more a plug and play. But this one is a 9-year renewable lease.
Are you raising investment or are you raising loan amount?
No, we're raising investment.
And what's the evaluation?
So the valuation we had was so there's a 5.87% dilution. So about a 40 crore valuation that we have on the company. So
This is the first time you guys are raising the fund?
No, we raised one small round just post around 2020, late 2020. Where we raised it at about 22 odd CR. But again, at that point, we were not looking at a model where we were, kind of building the brand on our own. It was still in that model of increasing our footprint. We are a brand within a brand kind of a concept.
So this is the up round, went from 22 to 40.
Yes. And this is the model has completely changed. So here we are the entire, the entire show is being run by us as opposed to being within a particular location.
So
And,
Naveen, how can we participate as a from USA or an international?
Oh my God, you're basically asking the same question I was going to ask. Thank you.
All right, yeah.
So I think from a fund perspective, I mean, we can. It's either that it's very simple as I understand it. So it's similar like some of our German partners have basically invested directly. The thing is, if your question is more on how you send money into India, is it more? I'm assuming it's more around that, right? Or
No,
that
not even the taxation and everything.
That's correct.
Yeah. So maybe we can have a little bit more detailed thing around that. But as I understand it, if you're investing from any account in India as an NRI, that becomes a little bit more challenging given that NRE, NRO account and repatriating funds back from here to the US. That is a little bit more complicated as opposed to someone sending it directly from the US to us. And then because then taking funds back become easier, as I understand it. Long story short, but there's a little bit more complexity when you do it from an NRE, NRO account type of thing.
So we'll be
But you
paying
have
the. Oh, sorry. Go ahead.
Sorry, you have the tax guy who can handle all those?
Yes, we do. We are. That's what I said. So we can have a little bit more of a detailed conversation. Our chartered accountant helps us with that because we have already we have people investing in with our investors from Germany also coming in. Couple of them are one of them at least is an NRI based. I mean, pretty much spent a lot of 20-25 years in Germany. So we have a few flavors of those. So we can have a little bit more detail in terms of how exactly that could work and advise you from that perspective.
So you're
Can
planning
you
to have another session?
talk about your exit strategy? You mentioned some exit strategy here for the.
Yeah. So what we were looking at, so we had this question as to, from a couple of people as to how do we get our returns, right? I mean, and since this is purely equity and we're a private limited company, essentially there are two ways. One is the returns come in form of dividend payments, which we're looking to start in from 2024. If just going back really quick to this roadmap that we had planned out, going down this path, I mean, this industry definitely, especially on the beer side, is a capex heavy industry, especially when you're looking into getting into areas like retail, which is definitely areas we want to get into, given the experience of our team. So around given our roadmap 24-25 to scale via retail, there will definitely be another round that we'll be raising, given all of the what we have achieved. And at that point, we will give an opportunity for investors to existing as well as the ones who have just come on to exit, which is and that's kind of what we've covered in here. So we will not be looking at any other additional rounds till 2025 because we want to establish and showcase at least these 3-4 locations running, as well as our build in our coffee side of things via e-commerce and our cafes over the next 2 to 3 years, and then look at another around when we're getting into the retail side of things.
Do you guys have any projected returns on this, or?
I can share that with you. I can share that because a little bit more detail. I can share that when I put the deck together and share it.
Perfect. Thank you.
So I know we're out of time. I'll try and do is with the deck, I'll also try and cover very briefly. I'll speak to our chart accountant to see how, any brief elements around taxation, etc., how that would work, and cover that also in some slides in the deck, and get that across to you. Like I said, if there are any questions after that, please feel free. My number's on the group. You can reach out to me. I'll be happy to
I think if you can include some information on sending money, right? So there are a couple of options.
Yeah, I'll do that.
Many of us have Indian account also. You said it is some complexity. I want to understand what is the complexity in sending money from, say, NRO account.
Yes. I'll cover. That's right. So let me frame it right with with our chart accountant who'll be able to frame it the right way so that I don't misrepresent anything.
So I think
and I'll include those in
the deck. Yeah, if you can include that in the deck,
yes.
like
Yes, absolutely.
the funding and taking the money in, getting the money in and taking the money out, right?
Sure. Yeah, I'll include something, some literature related to that, and post that and then circulate it. So, given a day or two, I can get that across the entire consolidated thing to everybody.
Correct. So at
this
stage, it is too early, right? So you are not talking about IPO or anything like that.
No. It's too early.
Right.
I think earlier somebody was trying to ask a question. Jay Nair.
So I was asking, is any kind of transparency on the cash flow statement? Naveen want to share it with investors.
Oh, okay.
Going to be provide some kind of visibility how he's going to be plan his 3-year vision, and especially where he's planning to expand his operations outside Bangalore. Any kind of franchise he's planning to open it in that kind of sort, right? Because it's a very competitive industry, beer industry. If you really look at the top 10, and it's an emerging market, that's for sure. But how he's going to place himself in the competition. So we would like to get that information.
Yeah. So it is competitive. Just to real quick cover that, but there are only currently in the craft beer space, there are only 3 breweries. We'll be the third one who is doing this model of having a reach outside of the space that we operate in. Currently, most microbreweries, there are about 60-70 of them in Bangalore, can have the license only permits you to sell within your location. You don't have, so that what happens with that is at some point, because given capacities, you kind of peak. You can't go beyond 16,000 liters. In this kind of a model, which we are doing, which is we've consciously gone down that path, which means licenses are more expensive and etc. But it gives you the that one license then allows you the capability of reach. So currently, we're only the third craft brewery to get into that. Toit, who's been in Bangalore for a very long time, just got into it about a few months ago. So. But I'll be happy to share, any more. Let me just look through what would be relevant in terms of assumptions and everything behind the model, and I'll be happy to share that with you as well. But the first things first, what I will do is at least get some information out with this deck in terms of, how the investments would more from the regulatory perspectives in terms of money coming in, going out, and all of that answered. And parallelly also get additional information out to you in terms of how we've planned our model in terms of scaling, etc., and the assumptions behind it. I'm happy to do that.
Thanks, Naveen.
Most welcome. Thank you. And I know I've overstretched in time, but questions mean at least I've been able to articulate the message correctly, I hope. But yeah, so you can over the next. I'm going to try and target before the end of the week to get you as much of this as.
No, sounds good. Thanks, Naveen.
Thanks
Pleasure,
a lot for the presentation, Naveen.
No, my pleasure. Thank you.
I think if anybody is not a member of our investment group, send me an email, narinarayanan@gmail.com. If you see the invite, right? So you can respond and then send me your WhatsApp number. I can add you to the group. think Muthu had invited a few people. I'm not sure whether anybody is not in the group, then I can add them. And also I'm looking for some presenters on fixed income or bond strategy or things like that. So if anybody is doing a lot of trading or understand at least the bonds and fixed investments, we can schedule one session on that.
Yeah, Nari, I was going to reply to you. I can do that. This is Andy.
Okay,
I'll
that's
reach out to
perfect.
you. Yeah.
Thank you for your time. Appreciate
All
it.
right.
Have a good evening and connect soon. Thank
Yeah.
you.
Thank
All
you.
right, great. All right, great. Thank you, guys.
Thank you, Nari.
Thanks.
Okay, bye-bye.